Hello and welcome to this session in which we will discuss the enforcement mechanism against CPAs for conduct or misconduct for that matter. In the prior session, we reviewed Professional Code of Conduct for the AICPA as well as the PCAOB. That's great. We learn about the rules. Now, what would happen if a CPA violate those rules and don't adhere? Well, non-adherence may lead to enforcement actions by the following entities. We have the AICPA Professional Ethics Division. AICPA, remember, every time we mention the AICPA, it means auditors or CPAs that serve the private companies. We have the State Board of Accountancy, and that's going to be the most relevant. You're going to see why. And we have the PCAOB. Now, what happens if you fall under 1, 2, and 3, under any of the three bodies for enforcement? Well, always follow the most restrictive body. So if you don't want to get into any trouble, if there's any difference between the standards, you follow the most restrictive standard, the most restrictive code of conduct. Let's go ahead and discuss the enforcement of each body separately. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. Starting with the AICPA Professional Ethics Division. First, how does the AICPA learn about your violation? Well, it's mostly complaint. The AICPA would receive complaints from individual people who you are dealing with and they did not like what you did. Therefore, they will complain to the AICPA, assuming you are a member of the AICPA. Fellow practitioners might do that if they see you are violating the code of conduct. State societies of CPAs or government agencies. Simply put, the process starts by someone complaining. Now, members may face automatic sanctions if they have previously been disciplined by regulatory entities such as the SEC, PCAOB, or their State Board of Accountancy. When someone complains to the AICPA and the AICPA find out you were already been sanctioned, in other words, you were already been disciplined by the SEC, PCAOB, or your State Board of Accountancy, that's it, you're automatically out. There are two levels of disciplinary measures by the AICPA. One that's less serious for unintentional. Unintentional means errors, violations that you did not mean to do it. Under those circumstances, they may suggest remedial or corrective actions. For example, if there is a failure to provide complete disclosure for a minor audit client, they may suggest continuing professional education to make sure you are aware of your responsibilities. Then there is the more serious one. This is when you have the joint trial board is involved, and this board have the authority to suspend or expel a member from the AICPA due to a violation of professional ethics. When we say expel a member from the AICPA, it doesn't mean you can no longer practice. You might have that issue we'll deal with shortly when it comes to the State Board of Accountancy, but they suspend you, they kick you out of the organization itself. So the disciplinary action section on the AICPA website will display your name, location, those who are suspended along the reasons for their actions. And let's take a look at the website and just take a look at a sample, just to you make sure you don't do anything because you don't want your name on that list. If you go to the AICPA website and under disciplinary action, you will find the list. It goes as far as back as 2016. And if you notice, you can go in there and click on any particular year. Let's look at it 2023. And you can see names, and for each names, for example, here, Joseph, Scott Joseph, you can click on their name, and they will tell you exactly what happens here under the automatic disciplinary provisions. Mr. Scott, AICPA membership is suspended, retroactive to January 9, 2023, and they will tell you why. Mr. Scott entered into a consent agreement with Virginia Board whereby he was directed to pay a monetary penalty of $5,000 and restricted from performing any EBP or ERISA audit without prior approval by the board. I guess this individual was involved in some sort of a pension audit. It seems like that. And this decision was based on Mr. Scott violation of Virginia's Section 54.1 Standard of Conduct and Practices, in that he performed an audit that he was deficient in multiple areas. So he, as I mentioned, as I thought it was some sort of a pension or ERISA audit, and the audit was deficient and he was suspended. His membership was suspended. Obviously, you can take a look at many examples if you'd like to, and they go back to 2016 for that matter. Now let's move to the State Board of Accountancy, and I believe this is more serious for the individual. Why? Because individual practitioners are granted the license for their state. So when you're a CPA, for example, I'm a CPA in Pennsylvania, I'm granted my license under the state of Pennsylvania. So the state will have the power to withdraw your license, temporarily hold it, and invalidate the certificate as well as the practice license if you breach the State Board of Accountancy Code of Conduct. Now, most State Board of Accountancy adhere to the AICPA Code of Conduct, while some might impose different or more strict regulations. For example, for advertising, some states you're not even allowed to advertise. They're very strict about this. But your State Board of Accountancy is the most serious because they can withdraw your license. They can suspend your license. You can no longer practice. The AICPA, they can kick you out of the AICPA. That's fine. It's a private organization. You might be able to practice. But the State Board of Accountancy, you can no longer practice. Let's take a look at the Public Company Accounting Oversight Board. Remember, the PCAOB is the organization that audit the auditors that audit public companies. So the auditor responsible for overseeing the public companies hold the power to examine and take action against both firms and individuals who fail to adhere to Sarbanes-Oxley and the SEC regulation. Simply put, they oversees the auditors that audit public companies. This authority extends to applying sanctions that could involve. So if you are an auditor that audit public companies and you violated either Sarbanes-Oxley, ethical standards, or the SEC, they will come after you. They can suspend your license, which is that serious, revoke the registration, they can suspend or revoke the registration of the firm. And that's very serious. In other words, you can no longer audit public companies. And that's, for some companies, that's their lifeline. Also, the PCAOB can demand enhancement in the firm's audit quality control for a less serious violation, mandate supplementary training if they think you need additional training, also having the availability to levy financial penalties, and they can make you pay a fine. Let's take a look at multiple choice questions from Farhat lectures. Regarding the PCAOB enforcement action, which is the third body that we looked at, which of the following sentences is true? So we have 1 true, 3 false, which is easy. Let's try to look for the false one first. The auditors of public companies are not subject to the PCAOB sanctions. Well, if you get this one wrong, it means you don't know what the PCAOB is. The auditor of public companies are subject to the PCAOB sanctions. Therefore, A is out. Let's look at D. The rules of the PCAOB do not govern audit of public companies. On the contrary, the rules of the PCAOB do govern audits of public companies. So A and D kind of easy. And that's always the case. On the CPA exam, you should be able to eliminate 2 answer choices practically almost immediately. Now we're down to 50-50. The PCAOB may not require improvement in the quality control, in the firm's quality control. The PCAOB has the authority to investigate and discipline registered public accounting firm. Okay? Well, can they recommend improvement to your firm's quality control? Yes, they can. Yes, they can. It may not is wrong. They can suggest this. For minor violation, they can tell you just make sure you have a better firm quality control. They may recommend someone, or they may recommend certain additional practices. Therefore, B is out. The PCAOB has the authority to investigate and discipline registered public accounting firm. 100% correct. They have the authority to investigate and discipline. Now, what can they do under the discipline? They can suspend or revoke the registration, or basically ask you to improve your quality control, improve your training, or they may ask you to pay a penalty. What should you do now? Go to Farhat Lectures, look at additional MCQs. That's going to help you understand the enforcement mechanism in case a CPA violate their professional conduct. Invest in yourself, whether you are a CPA exam candidate, accounting student. Good luck, study hard, and stay safe.